Oh, there we go. I did unmute. So, Rob Moreller's Finance Friday. Screwed up everywhere, but that's what we do around here. We're supposed to be here at the noon hour every Friday talking about finances and the things you got going on with your money, but for somehow we're a little off kilter today. But with me, as always, the Satoshi himself from Sacramento. Sacramento, Satoshi.
Hello, Robert.
Yeah, he's back here, everybody. I'm trying to get this stupid thing going, but let me get back.
Critical issues.
Oh, okay. Let me get all that stuff out there. There's so many little details about everything that we do here. I'm trying to get things going, but it doesn't always work. And Satoshi, how's everything going for you? It's the beginning of the new year.
Yeah, it's good. We hadn't been on the air for a little bit. We got busy with weddings and
Christmas,
holidays and vacations and all that kind of stuff. So I don't even remember the last. It's probably been at least a month, right?
It's been early December. But that's how we roll, buddy. That's how we roll. So what's going on in your neck of the woods? We got a lot of things happening in the market. A lot of things just happening.
Yeah, a lot of I guess anxiety is what you could say.
Yes, I did notice that. So the last few days, I've been kind of hiding from my Webull and my Vanguard accounts, just because.
You're not checking every day now.
Well, I am a little bit, but I'm trying not to look at the negative numbers. Luckily, I sold off a few stocks. I did sell off Apple. I had a feeling that they were going to have some supply issues, and they weren't going to perform. But then that was a mistake, and they've skyrocketed a little bit. I don't even know where they're at. Let me see. Let me pull that up right now. Where is Apple at right now?
Well, I think there's a lot of so basically what's it seems like COVID is on the surge again. Everybody's talking about it. I know a lot of people that are getting exposed, showing up positive, and then I know a lot of people that are just sick in general. So like a lot of people going to get tests and stuff, and so there's probably some anxiety about that. Like, what is that going to do to the market?
Yeah, no, I sold that Apple stock off at like 145, and I bought it at like 124. I made a good, I think 18% run on that one, thinking that it had topped out, but it's still going. It's still going. So.
Yeah, well, just in general, you got to look like the S&P last year. I think I sent you that chart. The S&P was up 27% last year. So you got to remember the average gain for S&P is somewhere between 8 and 10%. So we had a really great year last year. So you can't forget about that. It's up 90% in the last 3 years. But so that could mean that, so it's had a lot of gains. Maybe they're a little overstretched.
Yep.
And when you can have those overbought conditions, maybe that can lead to some volatility going forward. And so I think and especially now, so the big thing is like, what is the Fed going to do regarding interest rates? We all know that inflation is high, everything is getting more expensive, and typically in that situation they need to slow the growth or slow down the economy. And one way to do that is to slow down bond repurchases, which they've said they're going to do that. And the other way is to raise interest rates. And so now, so the big thing was like after the last meeting, ideally the Fed really wants to do that.
Yeah.
They want to slow down purchases and raise interest rates. They need to do that. But the question is, will they be able to do that? But some people, they don't want to just the market is always trying to predict the future or look like 3 to 6 months ahead. And so some people don't want to wait to see what they're going to do. They're just going to, they're going to take some of their money off the table. And right now what people are doing is they're looking for the overvalued, which is predominantly, so crypto is part of that. And
is that why there's a big sell-off right now?
Yeah, that has something to do with it.
Yeah, and so I was looking
the high tech stocks. So anything with a high valuation, so if you have a stock that's The PE ratio, which is price to earnings ratio, is high,
Yeah.
and they're not making any money. Look at the revenue is negative, then it's probably sold off.
Mario says Happy New Year, by the way. Mr. Gray,
Right.
he's out there in the ether.
Hey, Mario.
I know, but the thing that I've been watching, and the thing that's really been kind of putting me off as far as watching my accounts is, all that money just is gone. I think on my Webull account, my fund money is down about 25%, and that's really a large part of my crypto. I mean, I don't have a whole lot of money in there, but I already kind of knew that. I already kind of knew that I was going to be getting into a little bit of volatility, getting into crypto. Wasn't really sure. I mean, I just threw some money in there just to get in there because I think once you put your money in the pot, it's like you play poker. And as the ante goes around, and there's times where you don't have to put any ante in, so you don't really care. You just kind of, flub it and not worry about it. And so when you put your money in the pot a little bit, you're a little bit more apprehensive about decisions. You're at least a little bit more conscientious. And so I'm glad I did that. And I'm not so glad that I probably timed it out wrong. I'm down 25%, but whatever. At least I'm in there and I'm kind of watching and observing it, because I think crypto right now is at 41,000, or at least Bitcoin, I should say, 41,925 as we're on this show right now. But the big question is, as people are pulling out, because what I'm seeing, and I'm sure you're seeing it, Satoshi, is that there's a big sell-off. Everybody's selling everywhere. Not necessarily everywhere. Crypto is one of them. Tech stocks, I think, are another. Those future earning type of things. But I don't know where people are going. I pulled up the 30-year Treasury because somebody said that people are moving their money into long-term investments, and the 30-year Treasury is a government-backed bond, right? And I did notice that the Treasury yield there was kind of going. Let me pull that up real quick. As far as buying bonds, I mean, this is on the, is this the day chart? I think it's on the day chart. And so you can kind of see from November or early December, before this volatility started, you see a rise over the next 30 days in the 30-year Treasury. And that's trusting that the U.S. government can pay back those bonds over 30 years. And that's a long-term play. It's not the 2-year, it's not the 10-year, it's a 30-year. That's awesome. But I don't know where everybody else is putting their money. Part of it is real estate. We were talking about that, before the show. It's definitely not gold. Gold is, everybody's staying away from that. I was hoping gold would have a run these last, couple weeks. I've been holding on to my gold mining stock for God knows how long, hoping that there would be a change. But I will say the one mining stock that has been good for me is Vale, or VALE, which is nickel mining. And that stock is up, I believe. I don't want to show anybody my personal stuff. But, I believe that is up about 10-15%. So where is everybody going, Satoshi?
Okay. Well, as usual, you had a lot to say there. So
I'm trying to digest everything.
Now.
There's so many things to digest. I'm like,
you went from crypto, tech stocks, bonds, gold. What's the future? Yeah. So I sent you the. Let's look at what performed last year.
all right, let me pull that up real quick.
Basically, the winners last year were big tech.
Yeah.
So Google was the number one. It was up 65%. Semiconductors did really well. Energy did really well. I don't really have any energy. I had one, the Robinhood free stock, and I looked at that, and that was up like 140%. I was like, whoa, that's cool. But I only had one share. But real estate also did well. And if you look down at the bottom, the losers were the precious metals, your gold, silver. China didn't do very good.
I don't think China did very well at all.
Yeah, well, the Evergrande thing and the whole thing with the bonds, like what you were talking about. So you just remember, people can they can sell their stocks and they can put it into bonds, but remember, like, a bond is just like a loan, okay? And so you're lending your money. You're lending it to either the government or you're lending it to some corporation, and they're going to give you an interest rate in return for that. So you kind of have to just remember, do I want to loan, if I have $10,000, I want to loan that to somebody, and in return, they're going to give me, it was 1.5% last year. Now it's 1.7. So maybe I should buy some more of that. but you got to you got to take into account the inflation also. So I'm loaning at 1.7
Yeah.
percent, and inflation, remember, is still at 6. So I don't want to, but I just think like I was saying, I don't know if I mentioned it earlier, but at the end of the year, there's a lot of like tax harvesting and
Yeah.
people reallocating their portfolio. So it's like companies or mutual funds, if they've made gains for the year, they want to sell those things because they want to show that they have good performance. They want people to invest in them. And then and sometimes they'll sell some of that stuff and then get rid of, like, going forward. Okay, people are worried about interest rates going up, so companies with high valuations that aren't making a lot of money, it'll be more difficult for them to grow, right? Because it'll be more difficult for them to borrow money.
Yep.
So a lot of people, and I think I told you at the end of the year, you kind of want to look. You have to think: is the Fed going to be my friend in the future? Maybe not.
Probably not.
I mean, they don't want to be, but they may
Yeah.
be forced to. And they do these things where they're kind of, they like to throw out little teasers like, okay, we're thinking about raising interest rates, and then they're kind of beholden to the markets in some way, because again, remember, real estate in the stock market is their collateral.
Yeah.
So they don't want to just raise interest rates and just collapse the whole market. That's not good for like politicians and people with power, because it's like, hey, if I collapse the market, then they're going to vote me
They're
out.
not
They're
going to
going to
vote.
say
Yeah.
Biden doesn't know what the hell he's doing. Get rid of him. See, now I'm on a tangent. Okay. Anyway,
I was listening, but I'm not writing anything down though.
yeah. And so you do get some like tax moving around. I think people are just in general, they're taking some of their money back from
Yeah.
the ones that got hit are kind of like, crypto is still considered high risk. I mean, I don't think so. For me, the story hasn't changed. I still think that it's growing and it's the future.
Still hasn't hit
So,
100,000 though, buddy.
well, it will. I don't know when, but I have a feeling that it
Everybody
will.
kept saying towards the end of the year. I was waiting for the end of the year. That's why I bought in November, thinking, hey, I was going to hit the 100. Didn't
Well, so
happen.
did a lot of other people, and you see like these
Yeah.
people. Okay, Bitcoin's going 100,000. I'm going to leverage my bet. I'm going to borrow money to speculate, and then you see them get crushed.
And that's
And
why,
it happens over and over again. You would think like, okay, maybe the first couple times people would learn their lesson, but it continues to happen. People want to get rich quick. That's just the greed that people have in general. But not all tech is. A lot of the high risk tech is been going down.
yeah,
But you still have, I think, like, going forward, like Apple and Google. I still love Google. Google's like one of my top 5 holdings. And like Amazon, those things are. Amazon is not going to. People are still going to buy
you can
stuff
pull
on
that up.
Amazon. I mean, this is not going to. And it's kind of on at a good price. So not all tech is the same.
See, Amazon's at 3,200 a share.
Okay,
It's
let's
it's
look
been
at
it's
it.
been going down. I mean, the MACD's a little bit low, buddy. I don't know. The RSI, it's what, 30, 32. People are selling off. You see? Are you
Selling off.
saying Amazon's a good buy right now?
Yeah, I would say Amazon's a good buy. The breakout for Amazon was around. I have the trend line right around there. But again, like, this is only
Hmm.
for, you have to look at the overall um,
Yeah.
picture here. Okay, so if you're doing this the right way, you remember, you want to have. So we have, for me, I think of things in thirds. So I have a third of my investments. I want to put it in real estate. Okay, so how's real estate doing? Remember, real estate last year did really well. It was up on average probably like 14-15%. So we had a great
Nationally, yeah.
year. So celebrate that. That's awesome. And going forward, again, if they raise interest rates too high, that could put some pressure, because it'll make buying a house, more expensive. Again, will they be able to do that? I don't know. Nobody knows the future. But real estate is doing well. And then another third of your basket of your
Yeah.
money should be going into dollar cost averaging, into an index fund, right? So an S&P index fund, and you're just every paycheck putting some money away. And if you look at the S&P, remember S&P was up 27% last year.
Let me pull it up
So I
again.
don't expect it to go up another 27% this year, especially with the Fed not, kind of backing the markets. But it really hasn't. What's the all-time high for S&P? I don't think it's come off that much.
This,
And remember the big portion of S&P is like things like Apple and Tesla and those kinds of things, which means that those things haven't come off that much. Look at Apple was just had an all-time high at 182. Okay, that was
let me pull that one too.
looks like January 4th.
You're off on a tangent.
Yeah. What is today? January 7th?
Today's the 7th of January. Yeah.
Okay. So we just had an all-time
2022.
high like 3 days ago. Okay, everybody just relax. It's gonna be okay.
Yeah, there is a downward momentum on the MACD. I might be a good buy if you feel that Apple's going to continue to go up. Not that we're giving financial advice in any way, but
Yeah. So
Apple's something to kind of keep an eye on.
then my other okay. So 1/3 is dollar cost averaging into an index, and then my other third is like trying to buy individual stocks. So I haven't really, like you, I bought Apple. I started buying Apple like 10 years ago or so. And
You got some room to budge.
so yeah, so I have a lot. So Apple's my second biggest holding. So in a way, I did sell some to buy Ethereum like a little while ago. So
Oops.
and for a while it was doing better.
Oops.
Maybe it wasn't the best idea now, but I still have quite a bit of Apple.
Yeah. Do you see Tesla though too? Don't you? You have Tesla, right?
Tesla, yep. Tesla is my number 4 individual stock.
I was watching.
I would like to get more Tesla.
I was watching it today, man.
Outstanding earnings in December. They
met their target. I think they exceeded their target, right, or their expectations.
Yeah,
they're not on the. They're not on
like 500,000 deliveries or something. So I still like Tesla, and I would.
I know. I kicked myself when it got down to like 880, and now it's back up to like 1,026 today.
Yeah.
Yeah. So I think the point is to watch these things and know kind of like the fluctuation of each stock. If you're wanting to go stocks, trying to and I'm not saying this is what you should do, but it's something I did. And the fact that you throw a little bit of money in there, whether it's like one share or whatever, it gets you started. It gets you kind of on that circle of at least paying attention to the pricing. Because then if you screw up and you only have one share, then okay, so you're only losing a little bit. But then as you get used to it or the used to the fundamentals of it, then you can kind of being a little bit more strategic about how you put that money in or how many more shares you want to buy. That's just the way I take it.
Yeah,
so,
and you can do what's called you can layer in. I don't know if you ever heard of that term, but let's say for example, like, so if you're going to do individual stocks, you kind of have to do a little bit of research and figure out, okay, which ones are good. Okay, for me, I like Tesla. I think Tesla is a disruptor. It's going to be a big company in the future. So now I've decided I want to buy some. Okay, then you kind of have to look like, how much money do I have, and try to decide how much Tesla do I want to get. And then, like you said, you want to watch it. You can do some of the technical analysis stuff that we've talked before. You can try to look at trend lines. You can look at RSI, and you can try to make decisions like, okay, is this a good time to buy now or not? And get to know this. And really, patience is the key. And then you can do this thing called layering in, where you can, let's say you want to own 3 shares of Tesla, or you want to own 1 share of Tesla, and you can divide it in, like, if you say now, like, you know what, Tesla just, I think Tesla, the year-end target for Tesla is around 1,500. Okay, so
is that a prediction?
$1,000. So is it a good time to buy, or should I wait for it to go to 800? These are the kind of things that you will beat yourself up. And sometimes you'll say, you know what, I'm just going to buy $1,000. What you can do is put in 1/3 of your money, and then you watch it, and you let that money work, because you need time in the market. Time in the market will help. So, like for me, if I bought Apple at $10 10 years ago, and now it's 180, and it went down to 170, I don't really care.
Yeah.
That much. And why is that? And that's because it's had time to mature. And so you can do that. You can put in a little bit of money. Let me just watch it. If it dips down, oh, okay, you can wait for a big dip. I like to see big dips where everything sells off, every kind of sector. Those are kind of where I get excited. Like, whoa,
Like
okay,
right now.
everything is selling off indiscriminately. No, it's very focused right now. It's not. I wouldn't say it's indiscriminate selling, but you can wait for those kinds of times and then say, okay, I'm going to buy another one, and then you just wait a year. Wait a year till you buy it at 1,000. Wait a year till it's 1,500, and it's like, okay, now I got a $500 buffer. Now I'm gonna wait for a dip, and then
Yeah.
when it dips, I'm gonna buy some more, and you just do that over time. I mean, that's really, or the easier way, another way. I don't know if it's easier, is it's just a dollar cost average. You could just say, you know what, I have $3,000. I want to buy a Tesla, and I want to do it over the next year. So $3,000 divided by 12 months will give me whatever, and
Yeah,
every month I'm buy it,
and,
so I don't have to worry about my emotions.
and I think the hard part is when you actually do make the decision to buy, and then it dips. Like so I bought 10 shares of Celsius. It's like a energy drink thing, right? It was at what, I don't remember the price, but anyway, it started going down, and I'm like, I kind of regret that. I was just buying it to be kind of catty and see if it would be a meme stock and go up like 50%, then I'd cash out. But it didn't, and luckily I didn't buy that many. I bought 10 shares, and it's like, ugh. But if you put in like your life savings into like a Tesla and hope for it to go up, you might have to hold on to it for a while. And I think that's the one thing that people make a mistake on, is they put their money in hoping for a miracle, like the lottery. They don't see it, and then they sell it off because they lost half of what they put in there, and then they just walk away and they don't get back into stocks.
Right. You don't want to. That's why if you're gonna for long-term investing, you want to pick the right companies, right? So you're saying, oh, I bought Celsius. I don't know why.
As a fun
It's a
thing.
drink company, and
I just drink it all the time.
I think you even will admit that it's probably higher risk.
Oh yeah.
Okay, so when you do high risk, so you're more doing a trade, like you're trying to I'm going to buy a little bit and then go up and sell it and make a little bit of money. So your mentality is to do a quick, like a trade on a high risk. So
Well, yeah,
in
that's
that
what
case,
everybody wants. You want a high yield. You want a high gain.
okay, then you got to get a little bit better at it, I guess, at spotting good entry points.
What a
What you can
dick.
do is if you like, let's say you think like, I think this is a good price for
Yeah.
Celsius, and I know it's high risk, but I'm just going to buy it and get in and get out, and let's say it drops,
Yeah.
then I would, then your thesis was wrong, and you just have to admit, like, I thought it was going to go up, and it went down five. And some people will put stop losses of 5 or 10%. So if I think like this is a bottom, like you were
Yeah.
saying, SoFi triple bottomed, I know it, so I'm going to buy it here, and then just put a stop loss at 5%, because if it goes down 5 or 10%, you were wrong, and then you just get out and you move on and you look for something else that you will do, and then you'll get better at it over time.
And
But
I will say that was my mistake, not putting stop losses on basically almost all of them. I thought I could time it. I thought I could, get on in the morning or whatever, and then, sell it when I need to. But no, I'm not as quick as the market moves. So
well, also you got to remember too, we were just in, like I said, the market was up 90% in the last 3 years.
yeah,
And why is that? It's because with COVID, there was a lot of money printing, a lot of QE. And when you have a lot of money sloshing around, people they get greedy, and that's why you see like all these meme coins, dog coins, and like GameStop and all these things. They're just,
yeah.
it's all that has to get, that's what makes a market. All those things get flushed out, and it will be, in my feeling, it will be harder to do that going forward, right? Because now you don't have the Fed helping you out.
I never had the Fed helping me out. Anyway, so we're about 5 minutes away, sir. We did want to talk about crypto a little bit, right?
If you whatever you want to do.
Whatever I want to do. I want to know where everybody's money is going. So like the couple things that I've been trying to figure out is like, people are pulling out of this market. So it's about trying to find different ways to invest and make money, right? So if people are pulling out of stocks, where are they putting that money? And I've been going everywhere. I'm looking at different things. I'm looking at the personal savings. So like if I pull this up real quick. So the personal savings, like people during the pandemic, like you were talking about, saved money, spent money, somewhere around Q1 of 2020, saved money. And now we're going back down to our trend line and savings. We're basically spent everything that we saved during the pandemic. It's all
Yeah, I
gone.
read that too. Savings went down. I don't know
Yeah.
how do you feel? Do you feel like
Well, I want to know
I
where they're
mean,
going.
definitely things are more expensive, right? So
Yeah.
when things are more expensive, it's harder to save money.
Well, it's definitely housing. So, what I've noticed on the housing since I do the real estate part of it, I noticed a lot of money is going towards housing. So even for us, we put in 10% on the home we purchased, and a lot of the money, the discretionary money that we had, just went into an investment, which is good. And the hope is long term that investment will continue to increase. I'm concerned about the economy still. I'm concerned about the stock markets and how that'll affect the real estate market. And I believe where a lot of investors are going are more secure assets. Like I talked about at the beginning, the 30-year treasury, I think, was one of them. I showed that chart. I think real estate is probably the second one that I'm seeing the most in. Like people are piling their money in because they know it's a little bit safer there, at least long term. And if there's a dip, then that dip will be kind of more will surface better, I guess. I don't know,
Yeah.
react better than let's say a stock, especially like in Tesla when it goes from 1100 to 800 in 2 days.
Well, so yeah, a lot of people use last year,
Yeah.
I would say, use real estate as an inflation hedge, and that's because also remember, like you don't want to own bonds because you're a lender and getting low interest. Well, in a low interest rate environment, it's okay to borrow sometimes, especially for a home if you can get it, especially if you get a tax deduction, right? If there's inflation,
Yeah.
then you borrow 100,000, you buy a home for 100,000, but then a year later, if inflation's 10%, it's like it's like you only bought it for 90,000, right? Because the
Do you think
um,
prices are going to go down?
for real estate,
Anything?
um, do I think prices will go down? I mean, it's possible. I mean, I
I
don't know
I
what the future is.
I
But
I,
again,
I
it's like,
I don't
go
believe
ahead.
so. No, I don't believe prices will go down. So if everybody's anticipating market corrections, sure in stocks and short term assets, but I think these prices, the McDonald's going up from the Burger King announced at the Whopper or something, some sort of fat. Oh, it was Little Caesars. They after 23 years or 26 years of having a $5 pizza, it's officially changed the price of the $5 pizza to 5.55. That's not going back down. All these
Right.
prices aren't going back down. They will give discounts, sure, coupon codes, but as far as like prices going, and I think that's in real estate too, and more secure assets like real estate.
Well, the thing about real estate is it's not easy again to get in and out of. Number one,
Correct.
so you can buy a home for 500,000, and let's say it goes down to 450 next year. Uh, for you to get out of that, it's a long, like a monthly process.
Well, it could be more
So
than
that
that
prevents
because
people from panic selling. And number two, there is some utility in it, so you need somewhere to live, so you're not going to sell your house even if it dips.
and you can rent out not only the house itself but portions of the house. If you have a family member that needs a place to crash, okay, another 500. There's a lot of leverage you can use on that asset.
Right. It's an again, real estate was up big last year.
Yeah.
So as long as you don't over leverage yourself, remember, buying real estate is leveraging your money. Okay. So, you want to buy a house for 500,000. Well, I don't have 500,000. I got 50,000. Okay. Well, so you're leveraging your 50,000 into a $500,000 asset.
Yeah.
So you can over leverage yourself. It happened in 2000. When was it? 10. People
The
over leveraged
crash 2008.
themselves.
Yeah.
So as long if as long as you can make the payment, then you will be fine. That will be the only issue. So if you're buying something because I'll just buy this. Robert said real estate's a good inflation hedge. I'm going to buy it and I'm going to rent it because I can make the rent. And then if prices do go down next year, now I can't get as much rent, or I lose my renter, and now I can't make the payment. That's how you get in trouble with real estate.
So
But I mean, overall, is it going to go up next year? Is it going to go down next year? Nobody knows that, but I guarantee probably in 10 years, real estate will be higher than it is today. I mean that's what it
well,
has done, and I think the stock market will be higher, and I think crypto will be higher.
what I will show in real estate, I sent this out to my investors, and Must have deleted it. So I noticed every year, I believe prices will go up. I'm going to find exactly what I'm showing you. I do believe prices go up. When we're way past our time, sir. So
Okay.
I'm hoping to bring this titillating information to you directly. Uh, Let me pull it up. I found it. So I wasn't. This wasn't planned, but what I've been seeing in the real estate market. Let me get my head out of there. Is the supply. This is Phoenix. It's not national, so this is really directly related to Phoenix. So the overall, this is overall supply, month supply. A balanced market is typically about 6 months of housing in order to have a good buyer-seller negotiation kind of situation. But every January, the third week of January, you'll see here January 25th, January 24th, January 23rd. What do you see here, Senor? You see all these peaks?
So what is
That's
this? This is months or housing supply.
housing supply as of the third week of January.
Okay, makes sense.
So
I
there,
mean,
there is a
you have to remember what is it called? The not the millennials, but the older folks,
Gen X.
older
the,
than that.
the baby boomers.
Baby boomers. Yeah, I spaced on the name. Sorry. So baby boomers were a large cohort of people, and they're still living in homes.
Yeah,
It was the largest group of people in and now millennials are even larger than baby boomers. So you have two large
they're
groups,
dying
and
too.
baby boomers are growing up. They're in their 30s and 40s, and they're buying stuff, and they want houses. They need somewhere to live. So you have this big group of two groups of people buying for this asset of somewhere to live, and so it makes sense that the supply would be low.
Well, and you could see here there's a downward trend. So when there is a low or limited supply, it's demand and supply. There's supply and demand. So when there's a limited supply, you'll see an increase in prices. And every third week of January, there is a tremendous spike in housing. This was last year, and you can see there was no spike. It was just basically a flat line, and we went down. That's when housing prices increased. That's when we had this competition, and we're almost about the same today. So I predict, and I'm not a financial advisor or tell you what to do, but there is some pain I'm anticipating when it comes down to pricing. If you're in the market to purchase, if you're in the market to sell, this is the time to do it. But
Mhm.
investors, I believe, are putting their money into a more secure asset like real estate because they can
Mhm.
leverage off of it and they can rent it for a higher price. But this is the Phoenix market because that's where I tend to focus in on. But I did want to
Yeah.
show you that real quick,
Well, I
Henry.
think Phoenix, Arizona had it was like the third highest group of for real estate growth, I guess.
Hmm.
But it's interesting. I mean, I see the same thing with crypto. You can look on crypto exchanges. So typically, when people are going to sell, they'll move their Bitcoin into an exchange and ready so they can trade it. And when they're hodling or saving, they'll
Yeah,
move it off exchanges and put it into cold storage. And so when you look at that, uh,
cold storage.
Bitcoin on exchanges is at an all-time low also, which like you're saying, when you have a limited supply, which Bitcoin does, and low or or a low supply, then you should see price appreciation. So I don't know, it's kind of interesting.
Yeah, we'll definitely see it in housing. And I did want to bring one last thing up since we do talk about finance, and this affects me directly because I use this service all the time. But PayPal and Venmo, Cash App are all going to be reporting the IRS for anything more than $600. So if anybody makes any payments, Venmo, if you sell like your furniture, selling a TV more than $600, guess what? You're going to get a 1099 from these companies, and you actually have to pay taxes on your gain, which is silly. I mean, but it is what it is. I just want to make sure people are aware of that. Anything else, Henry? We're well past the half hour. Typically, the show is only about 30 minutes. We're about 35. You get the floor, sir.
Oh gosh. Okay. Well, I was just going to quickly say, yeah. This so
There's
this
nothing
is just
quick, Henry.
the government. They're getting desperate. They need revenue. They're spending like crazy, so they're going after. They want
Yeah,
to raise tax revenue. That's just the thing. And but just in general, you had asked me about SoFi, and I
it's
looked
supposed to be
at
quick.
SoFi actually started off as a like a loan refinance
Am I
company or
going there?
something, but now they're expanding into other finances, and they have a application just like Webull or Robinhood or whatever, where you can buy different stuff on it. So,
well, the reason I brought it up, it's triple bottoming from what I'm seeing. This is from when it opened or IPO'd. You can kind of see three little bumps there, and if you're looking at swings, is SoFi a purchase? I don't know. I'm not a financial advisor. I'm not going to tell you what to do, but SoFi might be something you kind of take a look at and look at the MACD.
So just remember, SoFi's only been around since November. It's kind of a new IPO.
Yeah.
So you don't have a long chart history to look at, but just in general, I think if they're going to raise interest rates this year, that's always a good thing for financials. So financials in general would be a good sector to buy. Now, compared to SoFi is a fast growing company. I think it grew its financial services by 100% last year. But just looking at the books, PayPal and Square, I'm a Square holder.
I bought Square.
They look the financials look a little bit better with those two.
Oh God.
But just in general, finance should be a good sector going forward. But anyway, that's it.
We'll be back next Friday. Oh, hold on. Let me do the outro music. Lindsay, hi. I saw you logged in real quick, and she said insane. She thinks you're insane, Satoshi.
I'm insane.
I don't know.
We're all insane.
It just says insane. I don't know what she's talking about. Maybe she'll fill in later on. But Rob Morales, RCO Network, here every Friday with Sacramento Satoshi, straight out of Sacramento. Bringing you finances, talking about your money, and anything we can help with. Tune in every Friday around the noon hour. Sometimes we don't make it, sometimes we do. Today was late, but we screwed up. But anyway, we'll see you guys next Friday.